What is up, tycoons? What's up, traders? Super excited for today's video. Thank you guys so much for watching. There's a lot of really important information that I need to cover, as well as some news. So we're going to dive into a really good presentation I have for you guys, covering a lot of the most important things that I think you guys need to be paying attention to right now. And about halfway through the video, I will be diving into TLT specifically and going over, some of the technical analysis that I'm watching right now on TLT. If you missed the last video, then you missed the cup and handle pattern formation that we've been watching. So far, we are getting the breakout, and there is a possibility, if that continues, that TLT could go up to that $111 region, but there's some necessary steps to happen on the way. So make sure to smash the like button, subscribe to the channel so you guys don't miss any updates as well as any of these videos. And remember, I am not a registered financial advisor or broker. Trading in any type of securities, whether they're stocks, bonds, cryptos, commodities, involves a significant amount of risk. So do your own research and consult with a financial advisor before making any investment decisions. The first thing that I want to cover is OPEC. All right, now they recently just announced oil production cuts. And I've been pretty bullish on energy and also making a lot of bullish, towards energy videos here recently, covering a lot of different things. Okay, we've had all the billionaires. We've had Warren Buffett, Berkshire Hathaway. We've had BlackRock. We've had Goldman Sachs, all being bullish on energy. All right, the energy sector XLE comprises about 10% of the stock of the S&P 500's earnings, but when it goes to market cap, it's only about 5%. So that data right there is pretty important and pretty bullish. It suggests that energy companies are actually going to have potentially a good earnings season sometime in 2023. Now, Biden abandoned his pledge to punish OPEC, right? And they just slashed oil production again. Initially Biden came out, but Sleepy Joe really doesn't remember what he says. And I think he just forgot that he pledged to punish OPEC if they do stuff like this. Okay. So as a result of this, we're seeing crude oil futures go higher. And this is extremely important because it's very relevant to inflation, which is still a problem, right? A lot of people think that the inflation problem is over. I've been showing you guys the core sticky CPI chart. What I want to show you guys is just regular core CPI right here. So core CPI excludes the volatile food and energy. So core CPI is going to be here in orange, and then crude oil futures is here in white, and they mirror each other. Now, CPI is obviously going to have a lag behind it because the data is from the previous month, but anytime you see a spike in crude oil futures, you generally see a spike in core CPI, right? And even though it excludes energy in the core CPI, the reason that you see this correlation is because higher energy costs generally mean higher cost for all goods, for almost all goods that there are. And the reason being is because of transportation. So the higher energy costs are going to result in higher transportation costs. And those higher transportation costs oftentimes can be reflected, okay, in the price of goods. So this is something that I'm worried about when it comes to inflation. Okay, we can see crude oil futures have been on a downtrend, and as a lagging indicator, we did see core CPI start to drop. But here recently, crude oil futures are spiking off of the oil production cut news. And if crude oil continues to go up for the next quarter or two, then that could result in higher CPI following behind. So this spike in energy is not going to be reflected in the upcoming April CPI report, as that is covering March's data. But you may see this reflection in higher energy prices possibly lead to higher inflation over the next coming months in the next few CPI reports, which leads me to believe really that the Fed is not going to cut rates. I know pretty much every single Fed meeting, everybody is trying to guess whether they're going to cut rates. I don't really see that happening, especially if these higher energy costs lead to higher CPI. Now, there's been a lot of news regarding the US dollar and the yuan. China's yuan has replaced the US dollar as the most traded currency in Russia a year after the invasion of Ukraine led to a slew of Western sanctions against Moscow. Beijing has deals with Russia, Turkey, Pakistan, and several other countries. It continues to expand that list of countries. In February 2022, the SCO, which is the Shanghai Cooperation Organization, it consists of China, Russia, India, Pakistan, Uzbekistan, Kazakhstan, Tajikistan, and Kyrgyzstan. They agreed to increase the use of their national currencies in trade between the countries. There's a Brazil-China deal that also allows the two countries to exchange goods using the Chinese yuan and the Brazilian real. The expectation is that this deal will ease the transactions between the two countries, reducing costs and promoting even greater bilateral trade and facilitating investment, according to the Brazilian Trade and Investment Promotion Agency. Meanwhile, several days ago, China, the primary rival to the United States' global economic hegemony, and Brazil, which has Latin America's largest economy, reached a deal to dump the U.S. dollar as an intermediary currency when carrying out trade and financial transactions. So if we're seeing higher energy costs in based off of OPEC cutting, one place to possibly look for a trade idea. All right. And remember, not personalized financial advice, but just some information is you could use and start researching some Brazilian energy companies, right? Because the US dollar is dumping right now. All right. And Brazil has been doing a lot of things with China, regarding trade and things like that. And, there could be potential to look into some Brazilian energy type companies. Okay. Now, this is just kind of going over how the dollar lost its position of the most traded currency in Russia. And you can see here the US dollar ruble volume and then the Chinese yuan ruble volume that has exceeded, right? And so we see that the Chinese ruble is actually above the US dollar ruble volume. And that's something that we haven't seen, right? The US dollar has always been higher, right? That's kind of why we have news. Now, if you take a look at here, we have the dollar versus yuan. We have the dollar here in green. And you can see that these things are inversely correlated with each other. Typically, you're seeing the dollar go up. You're seeing the yuan go down. All right. And, you can see here currently that the yuan has been on a rise. Okay. While the dollar, in fact, has actually been on a decline. If we take a look at the next one, this is something that I want to show you guys just kind of related to the currency markets. We have the dollar versus yuan versus Bitcoin versus gold. All right. And really since November, we see that Bitcoin is up about 38% and gold futures are up about 24%. Meanwhile, the Chinese yuan is up 6%. And throughout all of that, the US dollar is down almost 10% at 9.75%. So you see all these other forms of currency right now are really, kind of outperforming the US dollar and, making the US dollar look bad. Now, if we highlight Bitcoin and gold real quick, the reason I want to highlight this is because these kind of trade very similarly. All right. And a lot of people look at Bitcoin kind of as, the millennial version of gold, right? In a general sense, when you think about, taking cash out of the US dollar, younger people in a general sense aren't actually going out and buying gold. A lot of people think that they are actually buying Bitcoin and that it's their version of digital gold. And you can see that, they tend to kind of mirror each other a little bit. Not exactly, but once you see gold futures starting to rise, you also see Bitcoin starting to rise, right? And you see the drop in Bitcoin. We also have a drop in gold. And then here recently, since November, we've actually had a big increase in gold and Bitcoin, right? Now, Bitcoin is going to be an exaggerated version. So it's going to outperform gold when it's bullish, and then it's going to underperform gold when things are bearish. And we can see here, since that November bottom that I mentioned, Bitcoin is up about 36%, and gold futures are up about 23.82%. So really, we're seeing a lot of money pile into Bitcoin and gold, and a lot of money transferring out of the US dollar. Now, there's some gold mining companies that you guys can look at. We have a couple charts right here. We have NEM. We have AEM. All right, these are some potential gold mining companies. They got slapped hard in 2022. All right, things were pretty difficult for them as the cost of producing that gold and mining that gold was increasing while the price of gold itself was actually going down. So they were getting hit with a double whammy. We're seeing the exact opposite of that this year. Prices to mine gold are actually, leveling out a little bit, and rather than just keep on increasing. And meanwhile, the price of gold itself is actually going up. Now, this is that TLT cup and handle that I mentioned to you guys that we were looking at. Not only did we have, the breakout of this channel here, signifying the potential breakout and move to the upside, we do have that daily gap up to fill at 111. All right, if you're trying to go long, you need to have some type of risk management to the downside. And the reason being is we do have 3 gaps down to fill on TLT, all the way down to $95. So you do need to be cautious. There are still risks to the downside. It's not just, some easy trade where it's for sure a guaranteed to go up. So make sure to manage your risk wisely, and, take some profits along the way. or whatever meets your risk management profile. Now, on top of the breakout here, we had some question marks here on the MACD. The MACD has been very useful for spotting entries and exits, as suggested over here. When we get the red line crossed down below, we saw a big move to the downside. We see an entry signal, the red line crosses up above, we get a strong move to the upside. Over here, we had an exit signal as well, strong move to the downside. Here, we had an entry signal, strong move to the upside. And here recently, we were looking to see, was this thing going to continue dropping below and give us a sell signal, or was it going to curl back above this red line and give us an entry? And we got the entry signal. We got the breakout of this channel right here, our handle for the cup and handle, and we're pushing up higher. 109.69 is going to be a major resistance level. Above there, we could see that $111 gap fill on TLT. Just please be mindful of the possibility that we could come down and fill some of these gaps, if not all of them, on TLT. Now, this is the bond market divergence that we've had since March 6th. All right. And what I kind of just want to highlight here, we have TLT in orange, the S&P 500 in yellow, and you can see that they've been diverging. When one is going up, the other is going down. When one is going down, the other is going up. And we can see that even here recently, right? We have TLT continuing to go up. We have the stock market continuing to go down right now. And this is kind of just a sentiment that bonds may be going back to the way they, are supposed to work, right? Bonds are supposed to be a safe haven if stocks are going down. Now, that hasn't been the case, but the relationship between stock and bond returns is a fundamental determinant of risk in traditional portfolios. For the first 2 decades of the 21st century, the stock-bond correlation was consistently negative, and investors were largely able to rely on their bond investments for protection when equities sold off. And we're starting to see some of that come back in this chart, for instance, right? We're seeing equities sell off, stock market selling off. We're seeing TLT go up. Okay. Now, if we look, that hasn't been the case throughout this bear market, really, right? We see both of them are actually declining and both of them are actually rising. And since March 6th, we actually have gotten that divergence back, where they're kind of doing the opposite of each other. But 2022 was a really historic year where bond portfolios and stock portfolios really got decimated. And there is the possibility that with interest rates at the rate that they are right now, that being so attractive, and attracting a lot of people into the bond market, it is possible we're seeing that old correlation and that old divergence come into effect. So I'm going to be monitoring that. Like I said, it really most recently started happening around since March 6th. It's been about 1 month of that going on. We're going to see if that is just a short-term trend or if it's a much longer-term trend, and an indicator that things are going back to, kind of the way they go when it goes to the stock market and the bond market. Now, this right here is a little hard to see, but let me explain it for you guys. So this is the S&P 500 after the Fed fund rate in 2-year inversion hits 75 basis points, which we recently have done. All right. And so on average, you can see that we're only up a couple percent, right? We have the blue here on average, and it's up just a little bit, right? From 100. Okay, right at about 104 there, suggesting that, on average, returns are flat. Okay, they struggle, which is typically not a good year. Like on average, the S&P 500 is supposed to get you about 8% on average. We can see many years below, many years above. All right, we do have the LTM case outlier, but in this case, returns are mostly flat, right? Slightly positive. And generally, this is known as a struggle for, the stock market. Okay. If we take a look here, this is that 75 basis point Fed fund rate and 2-year yield inversion. And we can see that that's where we're at right now, currently on the chart. And so the big question is what happens next, right? And we can see that each time in the past, we have all of these recessions, all of these crises, the tech bubble recession, the great financial crisis, the repo crisis. Something bad has essentially happened each time that this has happened. And this is a large reason why you're seeing hedge funds and investors really overweight cash right now and underweight U.S. equities. Okay, if we take a look here, this is the hedge fund index gross returns right over here on the right is what we have. And we can see that it's actually negative, all right, close to negative 3%. And when you look historically, this is a really, really low performance. So don't let these hedge funds fool you guys, okay? They have actually been losing money, like a lot of retail traders. And they're doing some, some pretty historic losses right now. If you look at the averages, and you look at where we're at right now, there's only been a few other time periods where, they've had these 5-day returns of such negative returns. All right. Now this right here, current hedge fund asset class positioning, this yellow dot right here is going to be the long-term average. The blue bar is the current, and you can see they're underweight the long-term average when it comes to stocks. They're underweight the long-term average when it comes to bonds. Credit right here is near the long-term average, as well as commodities, the dollar, and other. Okay. So that's just something kind of interesting to show you guys. If you take a look at growth right here, growth is very much underneath the long-term average. Equity market or emerging markets, okay, is beneath the long-term average. The dollar weight, ex-US, all right, the value, everything is really, kind of just underweight right now when it comes to positioning, except for small and mid caps. All right. So that's something that's pretty interesting to me, is that they're a little bit overweight on the long-term average when it comes to small and mid caps. Right here, we have the S&P 500 technology sector and the 3-month rolling fund flow into the largest tech ETFs. Okay, and you can see we're at pretty low levels right here. Okay, this is the fund flows. And so even though we've been increasing, this has actually been a low volume rally, which suggests a weak uptrend rather, because volume is supposed to go with the trend, right? So if you have high volume and a high uptrend, that suggests strong uptrend. And if you have low volume with a high uptrend, then that suggests a weak uptrend. And we can see that the fund flows are not pouring in, even though we've had this really big rally here lately in the stock market. So just some interesting data that I thought you guys would enjoy. Right here, this is the equity sentiment. It slightly worsened in March. And this is from Bank of America, I believe. So over here, the red line is extreme bullishness for stocks, and this is the sentiment, and this is usually a sell signal, okay? And then this green line here is extreme bearishness, and this is typically a buy signal for stocks. All right, so the buy and sell signals are based on rolling 15-year, one standard deviations from the rolling 15-year mean. A reading above the red line indicates a sell signal, and a reading below the green line indicates a buy signal. We actually are getting close to potentially a buy signal. Sentiment is not very bullish. All right, we are nearing extreme sentiment, or extreme bearish sentiments, right? So that's kind of something that I'm looking at. Okay, and we could, potentially be seeing some type of crash in the market if that extreme bearish sentiment ends up playing out in the returns. But if we dip below this green line right here, that could be a potential buying opportunity for a longer term time period, right? Not necessarily things in the short term. Okay, and right here we have the S&P 500 deciles. Q1 2023 average performance based on 2022 performance. And so the 3 deciles of the best performing stocks in 2022 were all down in average of Q1 of 2023, right? And the decile of the worst performing S&P 500 stocks in 2022 were up an average of 16.8% in Q1 of 2023. So we're basically just saying that we're getting the exact opposite of what we got in 2022. When we're seeing tech a lot of the time leading the way right now, and we're seeing energy and financials really underperforming, right? And those were the big outperformers of 2022 when it comes to some of the indexes on the S&P 500. So that's it for today's video. Hopefully you guys enjoyed it. Smash that like button, subscribe to the channel. I've been doing a lot more Zoom coaching sessions, right? A lot of Zoom one-on-one sessions. If you guys are interested on those, email me at zachleytrades@gmail.com. We can go ahead and set up a time. I'm pretty much booked for this week. So, if you want to do something over the next week, usually I can fit you guys within a week's time period, or maybe 2 weeks at the most. So if you're interested, you want to do a one-on-one session, shoot me an email, zachleytrades@gmail.com. I'll respond to you guys as soon as I can. And if you guys want to join the Discord, the link to join the Discord is in the description below. We are doing a flash sale on the Discord. It'll be 50% off. And that expires on the end of April, right? So I believe April 30th is the last day of April. The code for that is Zachley, all lowercase, guys. It's just, there's no capitals, nothing special. It's just ZACHLY and the number 2. All right. And that will get you 50% off your first month membership. Okay, we've been killing it in there today, specifically before recording this video. I had a 50% day trade on SPX, and that was about 21 minutes exactly. Actually, I posted the entry at 12:06, and then the exit was at 12:27, with 50% regains, selling into strength. So, if you guys want to join the Discord, gain access to the call outs, all right, get buy and sell alerts, as well as the other plethora of resources in there. Feel free to join the Discord. Link is in the description below. Remember, use code Zackley, like the channel name, or use code Zackley2, all right, the number 2 after Zackley. And that's a special coupon code for this month in particular. It works till April 30th, and it'll get you 50% off.